All right, so I've got a buffet of bad news for you. Some of Wall Street's favorite food stocks are in negative territory. Early investors in Beyond Meat are moving onto greener pastures, selling their shares for the very first time since May's IPO. The shares are down more than 20%. Take a look at this, 23% basically. It's unbelievable to see this kind of drop, despite solid third quarter earnings, that is, and even worse day for the likes of delivery service Grubhub. Its shares sinking more than 40% on weak third quarter results. We've got Paul and Monica following it all. I know he's tasted it all as well. We've seen all the skits here with Richard. I mean, it's unbelievable to see Beyond Meat coming under so much pressure. And when investors had an option to get out of the stock, this is the result. Do you think it was just immensely overbought?
I think it was. You had obviously the lockup period expiring, as you mentioned, so insiders were able to cash in. And keep in mind, Beyond Meat shares are still trading at around 100. They went public a couple of months ago at 25. So
wow.
4 times your investment, if you got in on the ground floor, that's not too bad. So it's not a surprise that people are rushing for the exits. Beyond Meat also, they have a lot of competition that's going to be troublesome going forward. Yes, they're an industry leader, but Impossible has the Impossible Whopper with Burger King. They're now in grocery stores in the U.S. You have Nestle, you have Kellogg with the oddly named Incognito. So this is definitely not just Beyond market for the taking.
Yeah.
There's a lot of competition.
I love all these names that are coming out,
yes.
right? It's pretty incredible. I mean, the question is just how big the market is going to be and whether there's just enough appetite for products and these stocks as well. You've got solid earnings that came through for Beyond Meat, but Grubhub disappointed, I would guess, after the third quarter earnings were released. What does that tell us about the stock?
There was little to be found in Grubhub's results that were positive. They missed on earnings. They missed on revenue. The guidance is weak. The big issue right now, Lenny, is that there is, like with Beyond Meat, so much competition. Grubhub is facing Uber as a big threat with its Uber Eats business. You have DoorDash and Postmates, 2 really buzzy private companies with a lot of Silicon Valley backing that are also in the business. So everyone is rushing to give these promotions where it's like free delivery and promotional discounts. And that hurts profit margins, and that's a big problem. Right?
Exactly, but how do you become more competitive? You know, what is it, the thing that you're going to do that's going to be completely different to everyone else? So what do investors want to see from the likes of Grubhub?
Yeah, I think Grubhub is in a bit of a bind right now because investors probably don't want them being so overly promotional to try and gain market share.
But you create expectations as well.
Right, and if you lose market share to these rivals, that's going to be a problem. But I think Grubhub, they're moving more into the mass market, if you will, with national partners like McDonald's and other big restaurant chains. But by doing that, these are the companies that want those promotional discounts.
So in terms of the likes of Beyond Meat and all the other brands that are within this space, do you think that Beyond Meat has first mover advantage and they'll be able to capitalize on that?
I don't think they do, because you look at a company like Blue Apron, they were among the leaders in the meal kit delivery business. And then everyone woke up and said, yeah, sending ingredients in a box to time-pressed consumers that want to make a meal at home and make it easy, that sounds like a great idea. Let's do it too. And then we'll do it. And then all these other businesses got into it.
And the little mistakes of the other guys, right?
Well, there just isn't really that much of a competitive advantage for being first mover here because it's a low barrier to entry business.